Now, though, it is Monday, so that means we get to check in with our local CPA, Jeromy Bourque. He joins us virtually. Jeromy, thank you so much for being here with us today.
Oh, happy to be here.
Of course. So we're answering a question today. How do the mega rich barely pay tax?
Yeah, this article keeps floating around on social media, and a lot of people have forwarded it to me and asking me, how does Jeff Bezos get away with paying less than 1% in taxes?
So what can you tell people at home?
Yeah, so even if you read the article, they do kind of mention it's a misleading headline. They are including the increase in his net worth as far as like his income. And the tax code does not consider that income until, capital stock or real estate have been sold. So just because your company is worth more than it was last year, you're not taxed on that amount, even though we could tell that it is worth more.
Yeah, and so essentially, what does this mean? Because you sent me a bunch of bullet points, and one of them was increases and decreases in value of capital assets. Those aren't taxable events?
Correct. So, let's just bring it down to a small local level, right? So if you own a real estate, rental property, right, and you bought it for $100,000, and just because the market's high today, it might be worth $120,000. We're not going to pay taxes on the increase in value of that house until that house is actually sold.
So why are tax codes kind of set up like this?
So it kind of looks at it at a cash-based approach. No one's ever received cash, right? Just because the value of my assets have increased, I'm not paying taxes on that because there's no transaction to tax.
Yeah, I think this is a great thing to kind of break down because, as you said, this article has been floating around and a lot of people are asking about it. But what about corporations?
Yeah, so and on that, we're not, so just because our real estate went up, we're not paying taxes. The same thing goes for your company. If your company, the value of your company increases, from last year, you're not paying taxes on that. And mainly, you have to think about the smaller taxpayers, like Jeromy Bourque CPA, or let's see another local company like Acadiana Ambulance. Just because their income goes or the value of their company goes up, we can't pay taxes on that yet because there's been no sale of that company's stock. And that's because generally it's very hard to value that. So it could be worth, $100 million today, but also it could tank to 990, 1,000 next week. So it's very hard to kind of label that down. And one of the biggest reasons why, people say Jeff Bezos pays so little in taxes, because you have to understand he has a corporation, and corporations pay their own income tax. So if we assume that the information is correct in this article, where they say they reported $4.2 billion in income between 2014 and 2018, but only paid $972 million in taxes, that would be 23% of the tax rate. But also, C corporations are double taxed. So you have a tax on the income on the C corp level, and then dividends to the owners or the shareholders also pay taxes on that amount, going from 0 to 20%, depending on the tax rate. So if we assume that Jeff Bezos paid an additional 20% on his qualified dividends, his tax rate's actually 44%, when the individual maximum tax rate is 37%.
Well, Jeromy, we appreciate you coming on to break this down for our viewers at home. We're out of time, but if you at home want to learn more, head to KLAF.com.